Hello, today let us look at statement of profit or loss, okay? And this statement basically shows us if whether a business has made profit or loss during the year or the period that we are looking at, okay? So let us get into this question where we are told the following information is provided for the year ended 31st December 2025 for KM Limited, okay? So being given account balances of the revenue, purchases, inventory, the salaries and general expenses, director's fee, rent, depreciation, okay, salaries, advertising, ordinary share tax, depreciation of office, debenture interest, and retained earnings. And now we've been asked, prepare a statement of profit or loss for the year ended 31st December 2025, okay? So first, let us look at the structure of the statement of profit or loss. The first thing is you indicate the name of the company, okay? Once you indicate the name of the company, then you need to indicate the specific statement that we're preparing, then also the year or rather the period we're looking at, okay? Then let us look at the sections that make up this statement, okay? And the first one, I like to classify them like this. The first one is up to the point where we get the gross profit, which is usually revenue. Then we have the cost of sales, okay? So we are able to get our gross profit. Then we take our revenue with less cost of sales, okay? Then we get our gross profit. The second section is where we get to list our expenses, okay? Our expenses during the period. So these expenses, we classify them into two: selling and distribution cost and administrative expenses. Selling and distribution costs are the costs that are incurred to support the selling and distribution of what we are selling. Basically, if the company buys and sells cap, selling and distribution cost will be the cost that we incur in facilitating this selling of these caps and distributing them, okay? And for administrative expenses, it's basically the support that the business is being given to run. Okay, it could be, let's say, for example, the accountant. Is the accountant involved in the selling of the caps? No, the accountant is there to support the business by providing accounting services to the business, okay? So as a staff, it's just an administrative expense, okay? Then after that, we usually include finance costs. We include finance costs if there is, and then we take our tax, okay? We less our tax as well, then we'll be able to get the profit for the year. Now let us look at it. We start from the information provided. From the information provided, we've been given a revenue, okay? And revenue is 3 million. So we write here 3 million. Okay, then our cost of sales. If we check through, you're not going to see cost of sales anywhere here, but you can see you've been told the purchases, you have been told the inventory as at 1st January 2025 and the inventory as at 31st December 2025. So basically this is the opening balance and this is the closing balance during the period. How do we arrive at the cost of sales? The cost of sales, in this case, if we are dealing with buying and selling caps, it's basically the caps that we have sold during the period. How do we arrive at the caps that we have sold during the period? We take the opening balance, which is 90,000. This means these caps were bought in the previous period, and then those are the caps that were remaining as at 31st December 2024, the previous period. So we take that opening balance of 90,000, okay? Then we do what? We add the purchases that we have bought during the period of 800,000. So we add 800,000. We add 800,000. So those are the caps so far that have come in and they found 90,000. But what have we done? Our inventory as at 31st December is showing a balance of 100,000. So when we less the balance, we should be able to get what has been sold during the period. So in our case here, we have 90,000 plus 800,000. We have 890. We less 100,000. We are going to get 790,000. thousand. This is going to be our cost of sales. So here we will come and write 790,000. Okay, so we are lessing. So here you indicate the brackets to show we are lessing 790, so that we get to have our gross profit, which is 2,210,000. Okay, then we come to now classifying our expenses into two, that is selling and distribution costs and administrative expenses. So let us look at the expenses given. The first one is salaries and general expenses. Salaries and general expenses, this is administrative expenses. Let's say like an accountant salary is a administrative expense, because it is not involved, the accountant is not involved in the buying and selling of cups. The HR as well is not involved in the buying and selling of cup. What they are doing is supporting the business. So this 500,000 is what? It is an administrative expense. So you can indicate 500,000. And remember, this is an expense. We are lessing that expense from our gross profit, so that we get our net profit. So we less that one. Then the next one is director's fee. Director's fee as well. What is it? It is an administrative expense, because the work of a director is to strategize, maybe see the budget, approve some things, you get. So they are not involved directly in the buying and selling of these cups. What they are doing is supporting the business. So yeah, we are going to have 300. We're going to less 300,000. Okay. Then here we have rent as well. Is the rent involved anyway in buying and selling cups? No. Rent here is just being paid so that it supports the business to run. Okay, so here we are going to have less 80,000 under. You can see these expenses are under administrative expenses. Okay, then we go to the next one, depreciation of delivery vehicles. Delivery vehicles are used to deliver these cups to the client. Okay, is this are they involved directly in the selling and distribution of the business? Yes, in fact, they are involved directly in the distribution of these cups. Okay, so here we're going to have 70,000, but it is going to be under the selling and distribution cost. So here we're going to have less 70,000. Okay, then we are going to look at salaries of sales assistants. Sales assistants are the staff that are directly doing the sales. Probably they go to the restaurant and ask for contracts to supply cups. They go to offices to ask for supply to sell these cups. Okay, so their salaries are directly involved in selling of these cups. Okay, so we have 300,000. So we come and less 300,000 under selling and distribution cost. Okay, then the next one we have is advertising. Is advertising involved in the distribution of these cups? Yes, when you advertise, you're able to sell more, right? So advertising is involved in the selling of these cups. So also it is a cost for buying involved in the selling. So we take 40,000 under the selling and distribution cost. Okay, so what is remaining? We are told here ordinary share dividends. This is here to confuse anyone who doesn't know that the dividends should not be anywhere near the statement of profit or loss. This is something that is used. You will find it in the statement of changes in equity. Okay, so you will find it there, but you're not supposed to deal with it when you're preparing the statement of profit or loss. Okay, then we have tax. Tax, we have 300,000. We just indicate it here, but remember, it is usually deducted after. It is usually deducted after. Okay, so here we have depreciation of office equipment. Depreciation of office equipment. Office equipment are just supporting the business. They are not involved in the direct selling or distribution of these cups. So this 20,000 is an administrative cost. So we come here, right? An administrative cost of 20,000. Okay. Then what is next? Debenture interest. This is just a finance cost. A debenture it's more of a loan, is a type of a long-term loan, okay? So this is a finance cost. The business is incurring the interest. They are paying interest on this loan. So this is a finance cost to the business. So we usually deduct it aside. We usually deduct it after we have gotten our profit from operation, because our profit from operations is basically how we have sold less the cost that we have incurred in the process of earning this revenue. But you see, this finance cost is basically coming from a loan that we have, which has nothing to do with our revenue. Okay, it just came in maybe to add more money into the business, right? So we usually less it after. So first we have to get the profit from operations. How do we arrive at that? We take our gross profit, then we less this total of expenses, okay, which will give us 900,000. So basically we are taking this 2.2 million, we less 300, we less 40,000, 70,000, all the way to 20,000, and you will get 900,000 as our profit from operations, okay? So this is usually indicated like this, so that someone will be able to see how is the business running effectively, okay? Because you could have a business that doesn't have a loan. Maybe they had a lot of they had enough money that they didn't require a loan, but they are not operating effectively. But someone who has a loan, you can see they have a loan, but still the profit from operations is higher. Okay, even if the profit for the year is going to be lower, it is because they have a finance cost, because they had to take a loan so that they are able to sustain the business. Okay, so basically it is classified like this for someone to be able to see how is the business operating, is it operating effectively. Okay, so then after getting the profit from operations, then we less our profit, we less the finance cost, and now we are going to have 800,000. So basically we've taken 900,000 less 100,000, we've gotten 800,000. Then we are going to do less tax. Once we less tax, we're going to have 500,000, right? So another thing you note here, you see tax depends on the where you are, the location. So up to the point where we have profit before tax, we can be able to compare companies even in different locations, because the tax is a net expense that is unique, or it is different in different countries. So we will be able to see if it is a tech company in this country and in another country, how are they performing, even if the tax is not the same. Some might be having higher tax, their tax rate is higher, others is lower, but you'll be able to see, are they operating effectively, okay? So that is how basically we prepare the statement of profit or loss. It is very simple. You just have to do the sections the way they are, okay? So next, we are going to look at the statement of changes in equity.